Okay, welcome back. Okay, one thing about these 3 bar breaks of highs and lows is one thing I suggest is become very creative with them and really think, where would be the best time to use them and when would be, the best time to stay out of them and how you could use them. And one of the interesting things, okay, say we went long here on this buy signal, and then you get a 3 bar sell, that could be a profit. You could use that for a profit signal because there's nothing wrong with that. Because right at this point in time, we don't know if this market beans is going to head lower from here or not. If that's it for the move, so you could use in an uptrend, you could use the down triangle for a profit signal, and then you could use the green triangle to get back in the trade, the up triangle. Um, and there's just a number of different ways to use these, as we'll see as we go through these charts here. Let's go to a different chart. I think we pretty much covered that one. Now here's another beauty of these is, like I said, some of this stuff is going to be like so obvious sometimes, and that might. There's nothing wrong with just sitting out and just waiting for the very obvious trades. You don't have to be in these markets all the time. But on this wheat trade here, this was a strong blast up, and then it came down and tested the low and made a double bottom, and this was just an obvious double bottom. I mean, you could just know after you follow these markets long enough that this was making a double bottom here. I mean, I saw it coming a mile away, and you will too if you don't already see it. But I mean, I knew that this was making a low here. Now, buying the 3 bar high break would have put us in right on this bar if we would have used that. And that's a great place to get in the market. So if you have like a clear double bottom setup with a clear bullish divergence, and you're just sure of the pattern of the market and you're bullish wheat, that would be the time to go with the 3 bar break of a high, because what it does is it gets you in at a better entry point. Now we did with our system, trend system, we did end up getting in on this bar anyway. So we're going to get in this trade with one of the things we use no matter what. But this is just good information to have. Even if you never use it, it's still something that it's just good to know, because to be honest with you, a lot of people probably don't know about this. And then you can see this is wheat here. You can see how I mentioned that when it's a real strong trend, there's no breaks of the 3 bar low. There's no breaks of a 3 bar low on all these bars up until this bar. And that red triangle down was the break of a 3 bar low. And then when it put in a green up triangle, that would have been a buy entry point to the market. Now again, the farther you get up, the little more riskier this trade will get. I'd like to get that pyramid trade like down here somewhere. But this is fine, because that's the nice thing about it. You're only risking 3 bars, and it's a strong trend, and it's well worth a try even if you get stopped out. I think most of the time, because for one thing, we're going to be long from down here. We're going to have some big profits on this trade. So if you wanted to try to add like another little mini week contract up here, or full size contract if you have a big enough contract, that's a trade to take. And even if it turns out to be a loser, it's not going to kill you. So that's another good thing about it. Let's shuffle through a few more markets here. That was wheat. Okay, here's cocoa. Now here's another interesting thing about these. If the market's really making broad swings up and down, like this probably isn't a very good example over here, but over here, when you make big swings and they're clear swings, these 3 bar breaks, sometimes they'll just nail the low, nail the high, nail the low, nail the high. Now here would have been a bad one. If you would have tried to go long here, then you would have got stopped out. But again, there's going to be some stop outs. I mean, it's just part of trading. But find out how you want to use it. If you find a market like that's really on the move, like corn is now, you could probably take all 3 bar breaks, and you could probably make a system out of it and make good money at it, because it's a moving market. And when the market's moving, these 3 bar breaks are going to be like spread out enough to where they're going to be good signals. Now, where it's going to really kill you is like I showed earlier on that corn chart, where a market's just sideways forever and they're just going back and forth and back and forth and back and forth. But then that's just part of trading too, is trying to figure out how that works. It looks like crude oil's up here tonight. This is Monday night, the 15th, July 15th. Not January 15th. It's July 15th, because It's 90 some degree out. I've had the air conditioner on all day and it's hardly even brought the temperature down in the house at all. So it's, and that's what's driving corn right now in Iowa here is the heat and no rain. Okay, now here's another good way to use these arrows. See, this crude was in an obvious downtrend here, and we would have short right here on our trend system, and then we would have got short, and then this would have been a pyramid opportunity down. We broke the 3-bar high, then it put in a 3-bar sell. This would be a good short trade. So basically what you want to look at the idea of is taking 3-bar breaks with the trend on the trend down here. This sell signal was good. This sell signal was good. This sell signal actually would have been good. And this sell signal would have been good. All four of those would have been profitable. You're taking the break of a 3-bar low in a downtrend. But then you're taking it after it hit just broke a 3-bar high. So that's the trick to it. Wait for it to break a 3-bar high and then take the break of the 3-bar low. And then here's again where it came off the low, it put in a up break of a 3-bar, and then it put bars above the 10-10 bands. Even though this is a parabolic, this did put in bars above the 10-10 bands. And then here's our, we're going to call this our 1-2-3 trade, where it puts the move up, then it puts in the break of the 3-bar low, which it did on this red triangle, and then when it puts in the break of the 3-bar high, which it did on this green triangle. That's what this software shows. This software here shows the breaks of the 3-bar highs and lows with these red and green triangles. And then, so this trade would have put us long the market. We would have got long the market with our trend system over here. But again, if you don't want to use the trend system, or if you like using the trend system, but you want to also wait for it to do the 1-2-3 trade here, where it puts in this second buy signal, that's a very low risk entry point into a trade, because obviously once you get this buy signal, you can just put your stop right under here, and I mean that's a low risk entry point, and this market could go to the moon from here. So these are the kind of things that I hope you're excited about learning, and I hope you can see that they work as you study them. And I'm going to wrap up this video, and then we'll go on to, we'll look at this a little bit more, because this is a very important subject. I feel like these breaks of 3-bar lows and highs are very important.